The world of work is changing. Over the past 40 years, the labor market has undergone a series of significant developments which have dramatically changed who works, how we work, and what kind of work we do. Wages are more unequal. Employment is at record levels. The wages of most workers have stagnated. The types of jobs they're doing have changed, and the role of labor market institutions has shifted. These trends in the labor market are critical to people's living standards and to inequality. So what has happened to wages? Over the last 40 years as a whole, the UK has seen a period of rising earnings inequality much greater than in most developed countries. The UK labour market is now one of the most unequal in the OECD. If we look at this chart, we can see that earnings inequality grew up until the financial crisis in the late 2000s. The weekly earnings of those at the top of the income distribution, shown by the green line, were growing faster than those in the middle and the bottom. However, after the financial crisis, there was a long period of stagnation in productivity and real wages, hitting the living standards of most workers hard. This is a double whammy of more inequality coupled with little or no earnings improvement in real terms. However, over the past 20 years, low-wage workers have benefited from minimum wage increases. This is especially so over the past few years, with the minimum wage for those aged 25 and over having increased by 23% in real terms between 2015 and 2021. The minimum wage has become a very popular policy tool across the world to lift earnings at the bottom of the income distribution, but it has grown faster in the UK than in most other OECD countries, now placing the UK among the countries with the highest real minimum wages. It is in part due to the minimum wage that the earnings of low-earning employees grew twice as fast as median earnings between 2011 and 2019. On this chart, the grey line shows how the minimum wage has grown relative to different groups. We can see that minimum wage growth has outperformed all other groups. But even among the lowest earners, a growing fraction are not within scope for the minimum wage. Of the lowest fifth of earners, a quarter are now self-employed, up by 50% since 1999. They're not covered by the minimum wage, and their earnings have been falling. Indeed, the increase in the numbers of people who are self-employed, alongside a rise in other non-traditional contractual work arrangements, has been another key trend in our labour market. In 2019, before the pandemic, there were record levels of people in work. However, a significant proportion of the increase in employment is down to rises in self-employment. The solo self-employed, sole traders who do not employ anyone else, account nowadays for just above 12% of total employment, up from 6% in the early 1980s. We can see that at the same time as solo self-employment has grown, the percentage of people employed as employees and those self-employed with employees working for them has fallen. Concurrently, there has been a rise in atypical, more informal work. We often hear about the gig economy and zero-hours contracts in the news. Estimates from the ONS suggest that the number of workers on zero-hours contracts has grown from 143,000 in 2008 to approximately 1 million in 2019. Although part of this rise may reflect measurement issues, around 3% of the workforce are on zero-hours contracts nowadays. Compared to the average employee, these workers earn around £5 less per hour and work 10 fewer hours per week. So while there has been a rise in overall employment, there has also been an increase in the amount of workers in less well-paid, more insecure forms of work. Alongside changes in the nature of work, there have been big shifts in the role and importance of labour market institutions, which have affected bargaining power across the labour market. Union membership rates have decreased across the board. In 1983, 51% of employees were union members. By 2019, that figure had dropped to 24%. The decrease in unionization and the rise of contractual arrangements at the boundary between dependent employment and self-employment are both likely to have weakened the bargaining power of traditional employees in favor of employers and top executives within the firm. The 2020s posed wider challenges in the labour market, not least persistent wage stagnation and the expansion of non-traditional forms of work. We've already mentioned the lack of policy tools currently available to help those low earners who are not in traditional employment. In addition, the policy toolbox is bare when it comes to boosting earnings for those above the lowest pay levels. This matters not only for overall living standards, but also inequalities considered more broadly, such as intergenerational inequalities. Compared at the same age, median earnings for those born in the 1980s are no higher than they were for those born in the 1960s. This makes the aim of securing decent and fair work vital for economic and social inclusion. This research is part of the IFS Dayton Review, a multidisciplinary review of inequalities funded by the Nuffield Foundation. To read more about our research, visit www.ifs.org.uk/inequality.